From 1 July 2026, seeing Super on your payslip is no longer enough. You need to check whether the money actually reaches your fund. Before July 2026, employers generally had until the end of a financial quarter to make your Super guarantee payments. Now, the law requires employers to make those contributions in connection with each specific payday. But here is the critical detail. The legal deadline for that payment is based entirely on when your Super fund receives the contribution. It does not matter when your employer initiates the transfer or hits send in their payroll software. This payday system applies to almost everyone working in Australia. That includes full-time, part-time, and casual employees, as well as eligible temporary residents. It even covers certain people operating as contractors if they are paid mainly for their personal labor. Because there is a physical delay between your employer sending the money and your fund receiving it, you have to actively track the arrival of those funds. Step 1 is to read your payslip. It shows your exact pay date and the Super amount calculated for this specific pay cycle. That line item is an intended contribution. It tells you what your employer plans to pay, but it is not a receipt proving the money has actually moved into your account. Step 2 is applying the correct deadline. This calendar animation demonstrates the standard rule. The contribution must reach your fund within 7 business days after your qualifying earnings day, which is usually your payday. Notice that weekends and public holidays are excluded from this count. A missing entry in your Super app on the exact day you get paid does not mean your Super is unpaid. Allow for that statutory processing period to expire. There are specific situations where a longer permitted period applies. If this is your first contribution as a new employee, or the employer's first time sending money to your specific Super fund, the deadline extends up to 20 business days. Calculating this precise business day deadline prevents premature panic and gives you an unshakable factual case if the money is actually late. Step 3 is checking the fund directly. Compare the intended amount on your payslip with the actual transaction in your Superfund's app or website. When you log in, check that the employer's name matches, verify the date, and make sure the transaction status explicitly says completed rather than pending. Step 4 is checking the math. This equation breaks down the general 12% Super guarantee rate, which is applied directly to a base amount known as your qualifying earnings. Qualifying earnings are the payments legally used for the Super calculation. This 12% does not apply to take-home net pay, and it doesn't automatically include all overtime. It relies heavily on ordinary time earnings. Verifying that the money arrived on time and that the math is accurate stops minor payroll errors from quietly eroding your retirement balance over your working life. Step 5 is the escalation protocol. If the legal deadline has passed and the contribution is missing, contact your payroll department or employer in writing. Be alert for specific warning signs during this conversation. Watch out for unrecognized fund names, excuses that you are paid cash in hand, or unlawful claims that temporary visa holders and ABN contractors have no right to Super. Ask payroll for 4 specific pieces of data: the payment date, the exact amount they sent, the name of the destination fund, and the transaction reference number. Step 6 is external escalation. If the employer refuses to resolve the missing payment, use the ATO online services portal to report the failure. The Australian Taxation Office is the primary regulator for the compulsory Super guarantee. They are the ultimate authority for investigating and recovering unpaid Super. By keeping meticulous records and stepping through this process, you transform a missing payment from a personal frustration into a documented regulatory compliance issue. To secure this growth, you must repeat a 4-step loop every pay cycle. Note your pay date, count the legal business days, check your fund directly, and verify the 12% math. Mastering this routine ensures that the Payday Super laws actually function as intended, getting your money into the market faster so it can compound over time. The rules and percentages discussed are based on the legal standards in place at this time. This is general information. Super eligibility and qualifying earnings can depend on the payment and working arrangement. Check the current ATO guidance for your circumstances. Total vigilance at every single pay cycle is the ultimate, non-negotiable safeguard for your financial future.